Before we dive in, please remember that I am not a licensed financial advisor or insurance agent. This video is for educational and informational purposes only. The information presented here is not a substitute for professional advice from a qualified and licensed expert. Always consult with a licensed professional before making any decisions about your insurance coverage. Your financial situation is unique, and the details of your policy matter. You're driving down I-4, just outside of Orlando, minding your own business. Traffic slows you slow, but the car behind you doesn't. Bam! It's not a terrible accident, but your neck is stiff and your bumper is toast. You do everything right. You exchange information, you call your insurance company. You feel a sense of relief that you've been paying your premiums on time for years. You're covered. A few weeks later, a letter arrives. It's from your own insurance company. They're denying your medical claims. All of them. Suddenly, you're on the hook for thousands of dollars in medical bills and you have no idea why. This isn't a scare tactic. This exact scenario happens to thousands of Floridians every single year. They believe they have coverage, only to find out when they need it most that a tiny misunderstood rule in their policy has left them completely exposed. Florida has one of the most bizarre, confusing, and frankly predatory auto insurance systems in the entire country. It's a minefield of legal jargon and hidden clauses designed, it seems, to trip you up. And because of this, Floridians are not only paying some of the highest rates in the nation, but they're also some of the most underinsured without even knowing it. You could be one of them. You could be paying over $200 a month for a policy that isn't worth the paper it's printed on when a real crisis hits. But that ends today. In this video, I am going to pull back the curtain. We are going to demystify the Florida auto insurance nightmare. I'm going to give you the insider knowledge that agents and insurance companies don't always make clear. I will show you precisely what you need, what you don't, and how to spot the traps that can lead to financial ruin. By the end of this, you will be more informed than 99% of the drivers on the road. You will understand your policy better than you ever have before, and you will have the confidence to know that you and your family are actually protected without being ripped off. To do this, we need to break down the three great pillars of Florida's insurance chaos. First, there's the PIP trap. This is the part of your policy that's supposed to cover your own injuries, but it has a secret countdown timer that can make it worthless. Second is the minimums myth. This is the dangerous belief that buying the legally required insurance actually protects you from anything significant. Doesn't. In fact, it can bankrupt you. And third, there's the uninsured motorist nightmare, which addresses the terrifying reality of what happens when you're hit by one of the millions of Florida drivers with no insurance at all. Let's start with the biggest trap of all. Personal injury protection, or PIP. Florida is a no-fault state. In theory, this sounds great. It means that no matter who causes an accident, your own insurance company is supposed to pay for your initial medical bills, up to $10,000. This is your PIP coverage. It's mandatory. You have it. The idea was to keep small claims out of the court system and get people their medical money fast. A noble idea, horribly executed, because that $10,000 comes with two enormous razor-sharp strings attached. The first string is the 14-day rule. You have exactly 14 days from the date of the accident to seek initial medical treatment. Not 15 days. Not 2 weeks and a day. 14. If you wait until day 15 to see a doctor for that sore neck, your PIP benefits can be denied completely. All $10,000? Gone. Vanished. It doesn't matter if you were trying to be tough. It doesn't matter if you thought the pain would go away on its own. The insurance company has a contractual and legal right to tell you, sorry you waited too long, and leave you with the entire bill. Think about how insane that is. You're in a car wreck. You're disoriented, your adrenaline is pumping, you're dealing with getting your car towed, filing a report, and a secret clock starts ticking the second the metal crunches. And nobody tells you about it. But let's say you're smart. You know the rule, or you just happen to go to an urgent care clinic on day 5. You've dodged the first bullet, right? You've secured your $10,000 in medical coverage. Wrong. Now you have to deal with the second, even more confusing string. The emergency medical condition, or EMC. Under Florida law, even if you go to the doctor within the 14-day window, you are only automatically entitled to $2,500 of your PIP benefits. A measly $2,500. To unlock the full $10,000, a qualified medical professional, a doctor, a chiropractor, a dentist, must explicitly state in your medical records that you have sustained an emergency medical condition. What qualifies as an EMC? The law is vague, but it generally means a condition that could reasonably be expected to result in serious jeopardy to your health. Here's how this plays out in the real world. You go to the doctor for whiplash. The doctor treats you, gives you a prescription, and tells you to come back in a week. They do their job, but if they don't write down those 3 magic words, emergency medical condition, in your chart, your insurance company will cap your benefits at $2,500. One MRI or a few physical therapy sessions can burn through that in a heartbeat. After that, you're on your own. You have to be your own advocate. You have to ask the doctor, "Can you please document if my injuries constitute an emergency medical condition, so I can access my full insurance benefits?" Most people would never even think to ask that question. They assume their doctor and their insurance company are on the same page. They are not. The insurance company is looking for any legal reason to limit their payout, and the EMC rule is one of their most powerful weapons. So let's recap the PIP trap. You pay for $10,000 of coverage every single month. But to actually use it, you must first seek treatment within 14 days or you get 0. Then you must have a doctor specifically diagnose you with an emergency medical condition, or your $10,000 in coverage shrinks to just $2,500. It is a system perfectly designed to punish people who don't know the secret rules. It preys on the fact that after an accident you're hurt, stressed, and not thinking about legal technicalities. This is just the first pillar. This is the coverage for your own injuries. We haven't even touched on the damage to your car, or what happens if you hurt someone else. You might be thinking, okay, that's crazy, but at least I have liability insurance to protect me if I cause the accident. I have the state minimum coverage, so I'm protected, right? That's the minimums myth. And believing in that myth is like thinking a paper umbrella will protect you in a Category 5 hurricane. It's the single most common financial mistake Florida drivers make, and it has the power to destroy everything you've ever worked for. And that is exactly what we're going to break down next. So what is this catastrophic mistake? It's not drunk driving. It's not texting behind the wheel. It's something far more subtle. It's a decision you make sitting on your couch, clicking a button, thinking you're being financially responsible. The mistake is buying the cheapest state minimum auto insurance policy Florida law allows. It's choosing the policy that's advertised on TV for $59 a month, the one that lets you print out a card and legally drive off the lot. You think you've checked a box. You think you're protected. But what you've actually done is buy a lottery ticket where the grand prize is financial ruin. Let me tell you about a guy we'll call David. David is a good guy. He's a project manager for a construction company in Tampa. He's married, 2 kids, a dog. He coaches his son's little league team on weekends. He's saving up for a down payment on a bigger house because his daughter wants her own room. David is a careful driver. No accidents in 15 years. He pays his bills on time every time. So when his insurance renewal came up, and he saw the price had gone up again, he did what any smart, budget-conscious person would do. He shopped around. He saw the commercials. Only pay for what you need. Get Florida's minimum coverage and save hundreds. Sounded logical. Why pay for extra stuff you'll never use? So he bought the cheapest policy he could find that was still legal. He saved about $70 a month. That's over $800 a year. That's a big chunk of the family's vacation fund. He felt good about it. He felt smart. One Tuesday afternoon, David is driving home from a job site on I-4. Traffic is the usual nightmare. He's listening to a podcast. He's thinking about the blueprints for a new project. For just a split second, he glances down to see who sent him a text. He doesn't read it. He doesn't touch his phone. He just glances. But in that 1 second, the sea of red tail lights in front of him has stopped moving. By the time he looks up, it's too late. He slams on his brakes, but the screech of tires is followed by the sickening crunch of metal and the explosion of an airbag. It wasn't a high-speed crash. Nobody was killed. But he had rear-ended a brand-new Lexus SUV. David's car is a wreck, but he's mostly okay. A little dazed, some bruises from the seatbelt and airbag. The driver of the Lexus, a woman in her 50s, is complaining of neck and back pain. The ambulance comes, the police come, reports are filed, tow trucks are called. Sitting on the side of the highway, David is shaken, but he's not panicked. Because he has insurance. He's a responsible adult. He's covered. The next day, he calls his insurance company. And this is where his life starts to unravel. The adjuster on the phone is polite, professional. But every word she says is a nail in the coffin of his financial future. First, they talk about his car. David didn't have collision coverage on his policy, because it wasn't legally required and he was trying to save money. His 10-year-old car is totaled. The insurance company gives him nothing for it. Zero. That's the first blow. He just lost his car and has no money to replace it. Next, they talk about his medical bills. David went to the ER to get checked out. The bill for the ambulance, the ER visit, and the x-rays comes to $7,000. Florida law requires you to have $10,000 in personal injury protection or PIP. This covers your own injuries, regardless of who is at fault. So David thinks, okay, great, my $7,000 bill is covered. The adjuster tells him yes, but PIP only covers 80% of medical bills. So his policy will pay $5,600. David is now personally on the hook for the other $1,400. It's annoying, but he can handle it. Then the adjuster asks about the other car. The Lexus. The body shop estimate to repair the rear end of a new luxury SUV, with advanced sensors and electronics, is $42,000. David hears this and takes a deep breath. It's a huge number, but that's what insurance is for, right? He asks the adjuster, so you guys will handle that? And this is the moment the floor drops out. The adjuster says, sir, your policy includes the state-required minimum of $10,000 in property damage liability. David doesn't understand. What do you mean, $10,000? She explains. His insurance company will write a check to the Lexus owner for $10,000. The maximum his policy will pay. And David is now personally, legally responsible for the remaining $32,000 in repair costs. He's stunned. He's just trying to process this. He now owes over $33,000, and he doesn't even have a car to get to work. But the worst part, the absolute worst part, is yet to come. The adjuster says, now regarding the other driver's injuries. David remembers the woman complaining about her neck. He asks, what about them? I have that PIP thing, right? And the adjuster delivers the final fatal blow. She says, sir, personal injury protection only covers your own injuries. For the other driver's injuries, you would need a coverage called Bodily Injury Liability. David is frantically trying to remember the details of the policy he bought online. He asks, okay, so how much of that do I have? And her answer is what I want you to burn into your memory. She says, sir, bodily injury liability is not required by law in the state of Florida for most drivers. Your policy does not include it. You have $0 of coverage for her injuries. Zero. Let that sink in. David caused an accident. He injured another person. And his legally purchased Florida auto insurance policy provides exactly $0 of protection for that. A few weeks later, the letter arrives. It's from a law firm. The woman in the Lexus has a severe whiplash injury. 2 herniated discs in her neck. Her medical bills for the ambulance, the hospital, the MRI, the ongoing physical therapy, the pain management injections have already passed $90,000. She's a successful real estate agent, and because of her injuries, she hasn't been able to work. Her lost income is calculated at $60,000 and climbing. The letter is a formal demand for payment. For her medical bills. For her lost wages. For her pain and suffering. The total demand is for $250,000. David's insurance company covers $10,000 of the property damage. The other $310,000? That's all on David. He has $30,000 saved for his family's down payment. The lawyer tells him to hand it over immediately. But that's just a start. They will sue him for the rest. They will get a judgment against him in court. And with that judgment, they can garnish up to 25% of his paycheck every single week for years, maybe decades. They can seize his tax refunds. They can put a lien on his house, meaning he can't sell it without paying them first. His dream of a new home is gone. His savings are gone. His family's vacation fund is gone. His financial future, everything he has worked for his entire adult life, has been utterly destroyed. And why? Because he made one simple, logical mistake. He trusted that the legal minimum meant adequate protection. He thought he was saving $800 a year. Instead, he incurred a debt that will haunt him for the rest of his life. He is now a financial ghost, working only to pay for a single moment of distraction. David's story isn't real. I made him up. But his situation is terrifyingly real for thousands of Florida families every single year. These are good people. Responsible people. They just didn't know. They didn't understand that in Florida, our state minimums are so low they are a booby trap. A financial landmine waiting for one small mistake. That paper umbrella I talked about? That's your $10,000 in property damage. That's your $10,000 in PIP. And the Category 5 hurricane? That's a simple everyday car accident on a Florida highway. The system is designed in a way that allows you to believe you are safe when you are, in fact, completely exposed. So how do you fix it? How do you turn that paper umbrella into a concrete bunker? How do you build a financial fortress around your life so that one bad day on the road doesn't tear down everything you've built? It starts with understanding the single most important coverage you can buy. The coverage that Florida doesn't even force you to have. The coverage that would have saved David. And that is the very first thing we are going to add to your policy in the next part. That coverage is called Bodily Injury Liability. And it is, without a doubt, the single most important line item on any auto insurance policy in America. It's the coverage that protects your entire financial future. It's the shield that stands between you and total ruin. And in the state of Florida, it is completely 100% optional. Let that sink in for a moment. The state requires you to have coverage for a stranger's dented bumper, but not for their shattered spine. It's a paradox that has financially destroyed countless Florida families. So what is bodily injury liability, or BI, as you'll see it on your policy? It's simple. It pays for the medical bills, the lost wages, and the pain and suffering of people you injure in a car accident that is your fault. It is not for you. It is for them. It is your "I'm sorry I made a mistake" fund. It's also your "please don't sue me and take my house" fund. Because when you cause an accident and someone gets hurt, their first call after the hospital is to a personal injury attorney. And that attorney's job is to recover every single dollar of damages from the person who caused the harm. That's you. Let's rewind David's story. He had the state-mandated minimums. $10,000 in PIP for his own minor injuries, and $10,000 in property damage. He runs the red light and T-bones the minivan. The mom inside, let's call her Susan, suffers a broken leg and a serious back injury. Her medical bills aren't $10,000. They're $200,000. Plus, she's a nurse who can't work for 6 months. That's another $40,000 in lost wages. Who pays for that? David does. His insurance policy has exactly $0 of coverage for Susan's injuries. The $10,000 in property damage his policy had? That's already gone, used to repair her crumpled minivan. For her body, for her pain, for her lost income. David is on his own. Susan's attorney sends a letter to David's insurance company. The company writes back and says, "Sorry, our client didn't purchase bodily injury coverage. We can't help you." So the attorney files a lawsuit directly against David, not against his insurance, against him personally. Suddenly, David is facing a $250,000 lawsuit. He doesn't have that kind of money. He has a small savings account, some equity in his home, and his weekly paycheck. The court enters a judgment against him. His savings are wiped out. A lien is placed on his house, meaning he can't sell it without paying Susan first. And worst of all, his wages are garnished. Every single week for the next 10, 15, maybe 20 years, a portion of his paycheck is taken from him before he ever sees it and sent directly to Susan and her attorney to pay off the judgment. Every promotion he gets, every raise he earns, a piece of it is sliced off the top. His financial future is no longer his own. He is working, in part, for a stranger he hurt in a single moment of inattention. That is the reality of driving in Florida, without bodily injury liability. Now let's press rewind and play the story again. But this time, let's imagine David had a decent insurance policy. Let's say he paid an extra $40 or $50 a month for bodily injury coverage of $100/300. What do those numbers mean? It means his policy will pay up to $100,000 for any single person's injuries, and up to a total of $300,000 for all injuries in a single accident. The accident happens. It's still awful. Susan is still hurt. But the aftermath is completely different. Susan's attorney sends the letter. But this time David's insurance company writes back and says, "Yes, our client is covered. We will handle this." And just like that, David is removed from the equation. The insurance company hires its own team of expert attorneys, at no cost to David, to defend him. They negotiate with Susan's lawyer. They analyze the medical bills. They handle the settlement. They become a financial fortress, protecting David and all of his assets. They cut a check to Susan for her damages. Let's say they settle for the policy limit of $100,000. David pays nothing out of his own pocket. His savings are safe. His house is safe. His future paychecks are safe. He caused a terrible accident, but he won't be paying for it for the rest of his life. That extra $50 a month just saved him from $250,000 in debt and a decade of financial servitude. That is the power of bodily injury liability. So why on earth doesn't Florida require it? The answer goes back to the 1970s when Florida became a no-fault state. The idea behind the no-fault law and the mandatory $10,000 in personal injury protection, or PIP, was to reduce lawsuits. The thinking was, if everyone has their own small pool of money to cover their own minor medical bills regardless of who is at fault, they won't need to sue each other for minor fender benders. And for a while it sort of worked. But there's a fatal flaw in that logic. $10,000 in 1975 is not the same as $10,000 today. Back then, it might have covered a decent hospital stay. Today, $10,000 can be vaporized by a single ambulance ride and an ER visit for a few stitches. It doesn't even begin to cover a serious injury. The system is broken. The minimum coverage required by the state is a relic, a dangerously outdated safety net with massive holes in it. Relying on Florida's minimum requirements is like wearing a leather helmet in an NFL game. You're technically following the rules, but you are not protected. So how much bodily injury coverage do you actually need? This is where you have to look at your own life. You need to buy enough insurance to protect your assets. The rule of thumb is that you want your liability limits to be equal to or greater than your net worth. If you're a young person just starting out, maybe renting an apartment with a few thousand in the bank, you might be able to get by with a lower limit, say 25/50. That's $25,000 per person, $50,000 per accident. It's not great, but it's infinitely better than zero. It will protect you from the vast majority of smaller claims. But for most people, for anyone who owns a home, has a 401k, or has any meaningful savings, that's not nearly enough. You should be looking at 100/300 as your absolute starting point. $100,000 per person, $300,000 per accident. This is the level that provides real protection. It tells the other person's attorney that you have a serious policy, and that it's worth settling the claim instead of going through a long, expensive lawsuit. It protects a modest home, a retirement account, and your future income stream. If you have a higher net worth, say more than $300,000 in assets, you'll want to look at even higher limits like $250/500. And at that point, you should also be looking at a separate umbrella policy, which we'll discuss in a later part. I know what you're thinking. This sounds expensive. And yes, adding good coverage will cost more than buying a policy that's essentially just a piece of paper to keep you legal. But the cost is relative. An extra $40, $50, or even $70 a month might seem like a lot. But what's the alternative? A lifetime of wage garnishment? Bankruptcy? Losing the house you worked 20 years to pay for? It's about risk versus cost. You're paying a small, manageable, predictable premium to transfer a catastrophic, unpredictable, life-destroying risk to an insurance company. It is the single smartest financial decision a driver can make. So you've done it. You've added bodily injury liability to your policy. You've built a financial fortress to protect yourself and your family from a lawsuit if you cause an accident. You are now more protected than 90% of the drivers you're sharing the road with. But that brings up a terrifying new question. You're protected if you hurt someone else. But what happens when one of those millions of unprotected, uninsured, or underinsured Florida drivers makes a mistake and hurts you? Who pays for your medical bills beyond your tiny $10,000 PIP limit? Who pays for your lost wages when you can't work? Who pays you for your pain, your suffering, and your permanent injuries? If the person who hits you has no insurance, the answer is nobody. Unless, that is, you have the other most critical life-saving coverage you can buy. The coverage that turns your own insurance policy into a shield against the irresponsibility of others. And that's exactly what we're covering next. It's called uninsured motorist coverage. And in a state like Florida, it is not an option. It is a necessity. It is the single most important coverage you can buy to protect yourself and your family from financial ruin after a car crash. Let's be very clear about this. It's not a luxury. It's not an upsell. It is the armor you wear into battle on Florida's roads. To understand why, I want you to imagine something. You're driving home on a Tuesday afternoon. The sun is out. You're thinking about what to make for dinner. You're stopped at a red light, maybe humming along to the radio. And then out of nowhere, bam, a massive jolt from behind. The sound of shattering glass and twisting metal fills the air. You're thrown forward, the seatbelt digging into your chest. Everything is a blur. Your car is totaled. Your back is screaming in pain. An ambulance is on its way. But through the shock, a small part of your brain finds a little relief because you see the other driver. They're out of their car, they're on their phone, and you think, okay, this is horrible, but at least they have insurance. At least they're going to pay for this nightmare they just caused. And then you discover the horrifying truth. The driver who just turned your life upside down has no insurance. Not a single dollar of bodily injury liability coverage. They were driving illegally. They have no assets. They have nothing. So who pays for your ambulance ride? Who pays for the emergency room, the MRI, the surgery to fix the herniated disc in your back? Who pays for the weeks, maybe months of physical therapy? Who pays your salary while you're out of work, unable to do your job? Who compensates you for the chronic pain you might have to live with for the rest of your life? Your personal injury protection, your PIP, will pay the first $10,000 of medical bills, and that will be gone in the blink of an eye. An ambulance ride and an ER visit can eat that up before you're even admitted. After that, you're on your own. Your health insurance might kick in, sure, with its own deductibles, copays, and coverage limits. But what about your lost wages? Health insurance doesn't pay you to sit at home and recover. What about the pain, the suffering, the impact on your quality of life? Health insurance doesn't write you a check for that. So you're left with a mountain of debt, a body that doesn't work the way it used to, and a life derailed by someone else's recklessness. And there is nothing you can do about it. You can sue the other driver, of course. You'll probably win. And you'll get a piece of paper, a judgment that says they owe you $200,000. That piece of paper is worthless. You can't get blood from a stone. You can't take money from someone who has none. This scenario isn't some rare one-in-a-million freak accident. This happens every single day in Florida. The statistics are absolutely terrifying. The Insurance Research Council estimates that more than 20% of Florida drivers are uninsured. That's 1 in every 5 cars. Sit at an intersection and watch 5 cars go by. Statistically, one of them has no ability to pay for the damage they cause you. Take a drive down on 95. 1 out of every 5 cars you pass is a ticking financial time bomb, waiting to go off and take your life savings with it. This is where uninsured motorist coverage, or becomes your personal hero. Coverage is you insuring yourself against the uninsured. When you're hit by a driver with no bodily injury insurance, your own coverage steps into their shoes. It acts as if it were the at-fault driver's insurance policy. It pays for what they should have paid for. It covers your medical bills beyond what PIP covers. It covers your lost wages. And critically, it is the only coverage that pays for your pain and suffering, your mental anguish, and the permanent impact an injury can have on your life. It turns your own insurance policy into a shield. But the threat isn't just from the uninsured. There's a second, more common and far more sneaky danger: the underinsured driver. This is the person who did the bare minimum. They bought that pathetic October 20th 10 policy we talked about earlier. They have $10,000 in bodily injury liability coverage. Let's go back to our crash scene. Same scenario. You get rear-ended. Your medical bills end up being $150,000. The at-fault driver proudly presents their insurance card. They're covered. Their insurance company sends you a check for their policy limit, $10,000. So now you have to ask yourself a terrifying question. Who pays the other $140,000? The other driver is legally off the hook. Their insurance company did its job. They paid the limit. So who covers the gap? The answer again is you. Unless you have underinsured motorist coverage. Uninsured and underinsured motorist coverage are usually sold together as one package. It protects you from both scenarios. If the other driver's liability limit is too low to cover your damages, your coverage pays the difference, all the way up to the limit you selected. If your damages are $150,000 and they only have $10,000 in coverage, your policy can cover the remaining $140,000. Fills the gap and makes you whole. Now, a lot of people hear this and think, but wait, I have great health insurance. Why do I need to pay extra for YM? This is a massive, dangerous misconception. As we said, your health insurance does nothing for your lost income. It does nothing to compensate you for a permanent injury or a lifetime of pain. But there's another, even more critical reason. Most health insurance policies have something called a right of subrogation. It's a fancy legal term that means if they pay for your medical bills from a car accident, and you later get a settlement from an auto insurance company, your health insurance company can demand to be paid back out of that settlement. They will put a lien on your recovery. So if you manage to get a small settlement from the at-fault driver, you may just end up turning most of it over to your health insurer, leaving you with nothing for everything else you've lost. coverage doesn't work that way. It's there for you. So how much coverage do you need? You should buy as much uninsured motorist coverage as you can possibly afford. And you should always buy the same amount of coverage as you have in bodily injury liability coverage. If you have $100,000/$300,000 in bodily injury liability to protect others, you should have $100,000/$300,000 in coverage to protect yourself. Your family's well-being is at least as important as a stranger's, right? But here in Florida, there's one more layer to this. It's a feature that can literally double or triple your protection, and it's something most people don't even know they have a choice about. It's called stacking. When you buy coverage, you'll be offered two options: stacked or non-stacked. Non-stacked is simple. The coverage limit you buy is the limit you get. If you buy $100,000 in non-stacked you have $100,000 in coverage. End of story. Stacked is where the magic happens. If you have more than one car on your insurance policy, stacked allows you to combine, or stack, the coverage for each vehicle. Let's say you have two cars, and you buy stacked with a limit of $100,000. Because it's stacked, you don't have just $100,000 in coverage. You now have $200,000 in coverage. If you have three cars, you now have $300,000. It multiplies your protection by the number of vehicles on your policy. And the best part? That stacked coverage follows you, not just your car. You could be a passenger in your friend's car. You could be riding your bicycle. You could be a pedestrian crossing the street. If you are injured by an uninsured or underinsured driver in any of those situations, your full stacked limit is there to protect you. It is a portable force field of financial protection that you carry with you wherever you go. Yes, it costs a little bit more, but the value you get is astronomical. It is, without a doubt, the single best bargain in the entire insurance industry. So I want you to do something. After this video, I want you to find your auto insurance policy declarations page. Look for the line that says uninsured motorist. First, see if you even have it. Because it's optional, many agents will have you sign a form rejecting it to make the price look lower. If you've signed that form, you need to call your agent immediately and fix it. Second, if you do have it, check the coverage limits. And third, look for that all-important word, stacked. Because we've just spent all this time building your shield. The armor that protects you and your family from the financial devastation someone else can cause. But what about when the roles are reversed? What happens when the accident is your fault? What happens when you're the one who makes a mistake, and the person you hit hires an attorney who decides to come after your house, your savings, your future earnings, everything you've ever worked for? We've just built your shield. But what about your sword? Or rather, what about the strength of the fortress protecting your own assets? That's where the numbers on your policy become the difference between a minor inconvenience and total financial ruin. And we're going to break down those exact numbers dollar for dollar next. Let's start with the absolute foundation, the bedrock of your entire policy: liability coverage. This isn't the coverage that fixes your car. This isn't the coverage that pays your medical bills. This is the coverage that protects you from a lawsuit that could take everything you own and everything you will ever earn. It's divided into two main parts: bodily injury liability and property damage liability. First up, bodily injury, or BI. This pays for the medical bills, lost wages, and pain and suffering for people you injure in an at-fault accident. Now here is the single most terrifying and misunderstood fact about Florida auto insurance. Bodily injury liability is not required for most drivers. Let me say that again. In the state of Florida, you can legally drive a 2-ton metal machine at 70 miles per hour without a single dollar of coverage to pay for the injuries you might cause to another human being. It is absolute madness. And because it's not required, many people, trying to get the cheapest policy possible, don't buy it. This is financial suicide. When you see numbers on a policy like October 20th or 100/300, that's your bodily injury limit. The first number is the maximum amount your insurance will pay for any single person's injuries. The second number is the maximum total amount your insurance will pay for a single accident, regardless of how many people are hurt. So a 10/20ths policy means your insurance will pay up to $10,000 for one person, but no more than $20,000 total for the entire accident. Now imagine this. You're driving home from work, you glance down at your phone for just a second, and you rear-end the minivan in front of you. It's a low-speed collision, everyone seems fine. The driver, a school teacher, gets out rubbing her neck. She says she's okay, but you exchange information. A week later, you get a letter from her attorney. That sore neck turned into 2 herniated discs, requiring physical therapy, epidural injections, and maybe even surgery. Her medical bills are already at $30,000. She's been out of work and has lost $10,000 in wages. Her attorney is demanding $100,000 for her pain and suffering. That's a $140,000 claim. If you only have that 10/20ths policy, your insurance company will write a check for $20,000 and wash their hands of the situation. They've fulfilled their legal obligation to you. Now, that schoolteacher's attorney is coming after you personally for the remaining $120,000. They will put a lien on your house. They will garnish your wages. They will seize your savings accounts. Everything you've worked for gone because you tried to save a few bucks a month. $10,000 doesn't even cover the cost of an ambulance ride and an emergency room visit anymore. The state minimum, if you're even required to have it, is a catastrophic trap. So what's the right number? A good starting point, the absolute bare minimum anyone who owns anything should consider, is 100/300. That's $100,000 per person, $300,000 per accident. This provides a respectable level of protection for a moderate accident. A better level, especially if you own a home or have some savings, is $250/500. This puts a much stronger wall between a lawsuit and your assets. The best coverage? An umbrella policy on top of your $250/500, but we'll get to that later. The key is this. The cost to go from a worthless 10/20ths policy to a protective 100/300 policy is often less than the cost of a couple of coffees a month. It is the single best investment you can make in your financial security. Next is property damage liability, PD. This is the part that pays for the other person's car, or their mailbox, or the storefront you accidentally crash into. Unlike bodily injury, Florida does require this. They require a whopping $10,000. $10,000. Take a look around you the next time you're on the highway. The average price of a new car in America is now over $48,000. That Tesla in the next lane? 70 grand. That Ford F-150? 60 grand. That luxury SUV? Pushing 6 figures. What on earth is a $10,000 policy going to do? You hit just one average new car and you're already $38,000 in the hole, personally liable for that amount after your insurance pays its tiny limit. What if you cause a multi-car pileup? What if you hit a commercial vehicle carrying expensive equipment? $10,000 is not a limit, it's an insult. It's a token gesture that leaves you almost completely exposed. For property damage, you should never have less than $50,000 in coverage. $100,000 is much better and should be the goal for most people. The cost to increase this is, again, shockingly small. We're talking pennies on the dollar for tens of thousands of dollars in extra protection. Don't be the person who loses their home because they totaled a new pickup truck and only had the state minimum coverage. Now we get to the most important coverage you can buy. The one that protects you and your family from the irresponsible masses. It's called uninsured or underinsured motorist coverage. Florida has one of the highest rates of uninsured drivers in the entire country. The most recent studies show that over 20%, that's 1 in every 5 drivers on the road with you right now, has zero insurance. They are breaking the law, and if they hit you, they have no way to pay for the damage they cause. Uninsured motorist coverage steps in and acts as the insurance the other driver should have had. It pays for your medical bills, your lost wages, your pain and suffering. It protects you, your resident family members, and any passengers in your car. Let's be crystal clear. If you are seriously injured by an uninsured driver, and you do not have coverage, you get nothing. Your personal injury protection will run out almost immediately. Your health insurance might pay some of the medical bills, but they won't pay for your lost income while you can't work. They won't compensate you for a permanent injury or a lifetime of pain. Only does that. Think about that 1 in 5 statistic. It's a game of Russian roulette every time you get on I-4. The person texting in the car next to you, the person speeding up behind you, there's a 20% chance they have no ability to pay for your medical care if they paralyze you. Coverage is you insuring yourself against their irresponsibility. And it's not just the uninsured you have to worry about. It's the underinsured. That's the person who caused the accident and only has a tiny 10/20ths bodily injury policy. If your medical bills are $100,000, their policy only pays the first $10,000. Your underinsured motorist coverage would then step in to cover the remaining $90,000. So how much should you get? The rule is simple and non-negotiable. Your uninsured motorist limits should always match your bodily injury limits. If you buy 100/300 of BI to protect your assets from others, you must buy 100/300 of UM to protect your family from others. To do anything less is to say that a stranger's financial well-being is more important than your own family's. And in Florida, there's a crucial feature called stacking. If an insurance agent asks if you want stacked or non-stacked UM, the answer is always stacked. Stacking allows you to combine the UM coverage from all the vehicles on your policy. If you have 2 cars and each has 100/300 of stacked UM, you now effectively have 200 to 600 of coverage available if you're in a serious accident. It is a powerful and relatively inexpensive way to multiply your protection. Rejecting this coverage is one of the biggest mistakes you can make, and agents are required to have you sign a form to do it for a reason, because it's that important. These 3 coverages, bodily injury, property damage, and uninsured motorist, are the 3 great walls of your financial fortress. They are not the place to cut corners. Skimping here is like building a mansion and then leaving the front door unlocked and wide open. So let's move inside that fortress. Because a fortress with impenetrable walls is useless if the inside is empty, or worse, full of traps. These next coverages are the interior systems. They're the plumbing, the power grid, and the security cameras that make your financial life inside that fortress not just safe, but livable after a crash. And we have to start with the most misunderstood, most controversial, and most fundamentally Floridian piece of the puzzle, personal injury protection, or PIP. Welcome to Florida's no-fault system. This is a term that causes endless confusion. No fault does not mean no one is at fault for an accident. Of course someone is. What it means is that, regardless of who is at fault, your own car insurance is the first in line to pay for your initial medical bills. You hit someone, your PIP pays for you. Someone hits you, your PIP still pays for you. The goal was to reduce lawsuits for minor injuries and get medical bills paid quickly. It's a nice idea in theory. In practice, it's a minefield. Here's the headline number for PIP in Florida: $10,000. That's it. Every single person who registers a car in this state is required to carry $10,000 in personal injury protection. A decade ago, that might have seemed like a reasonable amount. Today it's a joke. A single trip to the emergency room with a CT scan can burn through that entire amount before you're even discharged. An ambulance ride alone can cost over $1,000. So right off the bat, understand that your state-mandated minimum coverage is barely a band-aid for a serious injury. But it gets so much worse. You see, that $10,000 isn't even really $10,000. First, there's the 80-20 rule. PIP only pays for 80% of your medical bills. So for every $1,000 of medical care you receive, PIP pays $800, and you are immediately on the hook for the other $200. It also covers 60% of your lost wages if you can't work, but that also comes out of the same $10,000 pot. So your tiny bucket of coverage starts leaking from the very first dollar. But the real traps, the ones that financially ruin people every single day in this state, are the deadlines. First is the 14-day rule. This is non-negotiable. From the date of your accident, you have exactly 14 days to seek initial medical treatment. If you wait until day 15, your PIP coverage is gone. It becomes zero. Think about that. You get in a fender bender. You feel sore, but you think, I'm tough, I'll walk it off. A week goes by, the adrenaline wears off, and the pain gets worse. You try to get a doctor's appointment, but they can't see you for another 10 days. By the time you walk into that office, it's day 17. You have just forfeited every single penny of the coverage you have been paying for. The insurance company owes you nothing for your injuries. It is one of the most brutal and unforgiving rules in all of insurance. But let's say you do everything right. You go to an urgent care clinic on day 3. You're still not out of the woods. Now you have to deal with the EMC, the emergency medical condition. To unlock your full $10,000 in PIP benefits, a qualified medical professional, a doctor, a hospital, a dentist, has to officially state that you have an emergency medical condition. If they don't, or if you only see, say, a chiropractor initially who can't make that declaration, your $10,000 benefit is automatically slashed to just $2,500. So you could have a legitimate, painful injury, but if it's not deemed an EMC right away, your coverage is cut by 75%. PIP is mandatory, but it's a broken system. It's a leaky bucket with a timer attached. So how do we fix it? How do we plug the holes? With the single most valuable and tragically overlooked coverage you can buy, medical payments coverage, or MedPay. If PIP is the problem, MedPay is the answer. It's simple, it's cheap, and it's powerful. MedPay is also a no-fault coverage, just like PIP. It covers you and your passengers regardless of who caused the crash. But here's the magic. It works to fill the gaps PIP creates. Remember that 20% of your medical bills that PIP refuses to pay? MedPay covers it. Have a $1,000 health insurance deductible you'd have to pay before your health plan kicks in? MedPay can cover it. Unlike PIP, there are no weird deadlines, no EMC requirements, and typically no deductible. It is a straightforward pot of money, usually sold in amounts of $1, $2, $5, or $10,000, to be used for medical expenses. Think of it as your personal accident health fund. It makes the entire process smoother. It pays the bills PIP won't, it protects you from having to pay out of pocket, and it gives you a crucial buffer. For the cost of a few cups of coffee a month, adding $5,000 of MedPay to your policy is one of the smartest financial decisions a Florida driver can make. It transforms your mandatory flawed PIP coverage from a liability into a functional first layer of protection. Okay, so we've covered your injuries. Now let's talk about the second most expensive thing in any accident: your car. This is where collision and comprehensive coverage come in. People often lump these together and call it full coverage, but they are two very different things that protect your vehicle from different kinds of harm. Collision is exactly what it sounds like. It pays to repair or replace your car if you collide with something else. That could be another car, a tree, a guardrail, a pothole, or even flipping your vehicle over. If you are at fault for the accident, this is the coverage that fixes your ride. If someone else is at fault but they are uninsured, this is the coverage that fixes your ride. It is your protection against the physical act of crashing. Comprehensive coverage is for almost everything else. It's the acts of God and acts of chaos coverage. A tree branch falls on your car during a hurricane? That's comprehensive. Your car is stolen from the mall parking lot? Comprehensive. You hit a deer on a dark road? Surprisingly, that's comprehensive, not collision. Hail damage, fire, flooding, vandalism, a rock cracking your windshield on the highway, all of it falls under comprehensive. The easiest way to remember it is: collision is for when your car hits something. Comprehensive is for when something happens to your car. With both of these coverages, you will have a deductible. A deductible is the amount of money you agree to pay out of pocket for a repair before the insurance company starts paying. They typically range from $250 to $2,000. If you have a $500 deductible and your car sustains $3,000 in damage, you pay the first $500, and your insurer pays the remaining $2,500. A higher deductible means a lower monthly premium, but more financial pain if you have a claim. A lower deductible means you'll pay more each month, but you'll be out less money after an accident. Now the big question: do you need them? If you have a loan or a lease on your car, the answer is simple. Yes. Your lender will absolutely require you to carry both collision and comprehensive to protect their investment. But if you own your car outright, it becomes your choice. The standard rule of thumb is this: could you afford to write a check tomorrow to repair or completely replace your car without causing a financial crisis for your family? If the answer is no, you need full coverage. If your car is an older, high-mileage vehicle worth only a couple $1,000s, and the annual cost of carrying collision and comprehensive is, say, a third of the car's value, it might be time to consider dropping them and self-insuring, saving that premium money instead for an eventual replacement. Finally, let's talk about two small coverages that are often dismissed as fluff but can be absolute lifesavers: rental reimbursement and towing and labor. These are the convenience coverages. They don't pay for injuries or major repairs, but they manage the logistical nightmare that follows a crash. Imagine your car is too damaged to drive. It's sitting on the side of I-95. First, you need a tow truck. Without towing coverage, that's $150, maybe $200 out of your pocket right now. Then you get it to the body shop and the mechanic gives you the bad news. With parts delays, it's going to be 3 weeks until you get your car back. Now what? How do you get to work? How do you take your kids to school? You have to rent a car. At $50 or $60 a day, you are now looking at a bill of over $1,000 just for a temporary vehicle. Or, for an extra $5 to $10 a month on your policy, you could have rental reimbursement. Your insurer pays for the tow, and they set you up with a rental car, covering that $60 a day cost for up to 30 days. It turns a $1,000 high-stress catastrophe into a simple phone call and a minor inconvenience. It keeps your life moving while the pieces of the accident are being put back together. So, we've now fully constructed our policy. We have the 3 great walls of bodily injury, property damage, and uninsured motorist. And we've installed the critical interior systems: The flawed but mandatory PIP, patched up by the heroic MedPay, the collision and comprehensive armor protecting your vehicle itself, and the rental and towing that serve as your logistical life support. We have built the perfect policy fortress. But building the fortress is only half the battle. What happens on the day it's actually attacked? What do you do in those first few seconds, in those first few hours after the crash? Who do you call? What do you say to the other driver? What do you tell the police? And most importantly, what are the critical mistakes you absolutely must not make that could cause your entire, perfectly built claim to be denied? That's exactly where we're going next. The sound of the impact is just the beginning. The real damage, the financial damage, often happens in the minutes and hours that follow. It happens in the words you choose, the actions you take, and the evidence you fail to collect. So let's walk through this moment by moment. The glass has just settled, your ears are ringing. The very first thing you do before anything else is take a deep breath and check on yourself and your passengers. Are you okay? Is anyone hurt? If there is any doubt, any pain, any dizziness, do not move. Wait for medical professionals. Your health is the absolute priority. Assuming you are able to move safely, the next step is critical. Secure the scene. If you're on a busy highway and can safely move your car to the shoulder, do it. Florida law actually requires you to move your vehicle if it's obstructing traffic and can be driven. But if you're on a side street, or if the cars are inoperable, turn on your hazard lights immediately. This isn't just about safety. It's about preventing a second accident that could complicate everything. Now you pick up your phone. But you are not calling your spouse, not your parents, not your boss to tell them you'll be late. Your first call is to 911. Every single time. Even if it seems like a minor fender bender. Even if the other driver is incredibly charming and says, "Hey, let's just handle this between ourselves." Do not fall for it. In Florida, you are dealing with a state that has one of the highest rates of insurance fraud in the country. That friendly driver could later claim you caused massive injuries, or they could give you fake insurance information and disappear forever. When you call 911, be calm and be precise. State your location as clearly as possible: street names, cross streets, mile markers, nearby landmarks. Tell the operator there has been an accident, whether there are injuries, and whether the vehicles are blocking traffic. That's it. Do not volunteer information about how the accident happened. Do not say, "I think I looked away for a second," or "he came out of nowhere." Just the facts. The operator's job is to dispatch help, not to take a preliminary statement. While you wait for the police to arrive, the most dangerous conversation of your day is about to happen. Talking to the other driver. This is where people destroy their own insurance claims. There are 3 deadly sins of post-crash conversations, and you must avoid them at all costs. The first and most common is apologizing. Saying "I'm so sorry" is a natural human reaction. We say it when we bump into someone at the grocery store. But at the scene of an accident, those words can be twisted and used against you as an admission of guilt. It doesn't matter if you were just being polite or expressing sympathy that the accident happened. An insurance adjuster or a lawyer for the other party will hear, "I'm so sorry," and translate it to, "I'm so sorry, this was my fault." Instead, you can be humane without admitting liability. Say things like, "Are you okay?" Or "Is everyone in your car all right?" Show concern for their well-being, not responsibility for the event. The second deadly sin is discussing the details of the accident. Do not debate who had the green light, who was speeding, or who was changing lanes. The side of the road is not a courtroom. You are likely shaken up, full of adrenaline, and your memory of the split-second event may not be perfect. Getting into an argument can escalate the situation, and any statement you make can be remembered differently by the other driver and used against you later. Your story should be told once, and only once at the scene, to the investigating police officer. The third deadly sin is talking about your insurance coverage. Never ever say, "Don't worry, I have great insurance," or "My insurance will cover everything." This is a green light for the other party to inflate their claims. They might suddenly remember a neck injury that wasn't there before, or decide that their 10-year-old car needs thousands of dollars in very specific, very expensive repairs. You are legally required to exchange insurance information. That means providing your name, address, phone number, and the name and policy number of your insurance company. Nothing more. Let the insurance cards do the talking. While you are carefully navigating this conversation, you need to become a detective. Your smartphone is now the most important tool you own. You are going to document everything. Think of yourself as a crime scene investigator building a case. Start with the big picture. Take wide-angle shots of the entire scene from multiple angles, showing the final resting positions of the cars. Capture the flow of traffic, the street signs, the traffic lights. Is it a stop sign? A yield sign? Was the sun in a position to cause a glare? Take a picture of it. Is the road wet from rain? Document it. Then you zoom in. Take detailed photos of the damage to both vehicles. Get close-ups of every dent, scratch, and broken part. Take pictures from different angles. Look for paint transfer, where the paint from their car is on yours and vice versa. This can be crucial in proving the points of impact. Open your door and take a picture of the VIN number on the dashboard or inside the door jamb. And do the same for the other vehicle. Also, take a clear photo of the other driver's license plate. People can give you an expired insurance card, but a license plate is much harder to fake. And don't forget about skid marks. If there are skid marks on the road, take pictures of them. They tell a story about speed and braking that can be vital in reconstructing the accident. Finally, if there are any witnesses, people who stopped and saw what happened, get their names and phone numbers. A neutral third-party witness is worth their weight in gold. Their testimony can shut down any he said, she said arguments later on. When the police officer arrives, stay calm and be cooperative. They will likely separate you and the other driver to get individual statements. When it's your turn, provide the facts as you know them. Be clear and concise. I was traveling east in the right lane. The traffic light was green. The other vehicle turned left in front of me. Stick to what you saw and what you did. Do not guess at the other driver's speed. Do not speculate on what they were thinking or if they were on their phone. If the officer asks you a question and you don't know the answer, the correct response is, I don't know, or I'm not sure. It's far better than guessing and being wrong. Before the officer leaves, make sure you ask for their name, badge number, and the police report number. You will need this to get a copy of the official report, which is the foundational document for your entire claim. Now, I know what some of you are thinking. What if it's just a tiny tap in a parking lot? No real damage. Is all of this really necessary? Yes. 1,000 times yes. That tiny tap can turn into a $5,000 claim for a soft tissue injury a week later. That driver who agreed to take $100 in cash can come back and say you fled the scene of an accident. Getting a police report creates an official record of the event. It documents that the damage was minor and that no one claimed to be injured at the scene. It is your single best protection against a claim that gets invented or exaggerated days later. Do not let anyone convince you to just let it go. You've done it. You've navigated the most treacherous part of the post-accident minefield. You kept your cool. You avoided the verbal traps. You gathered irrefutable evidence. You have protected the integrity of your future claim. You've left the scene with your rights intact. But the clock is ticking. The next phone call you make is almost as critical as the one to 911. You have to report the claim to your own insurance company. But what do you say to them? Are they really on your side? What specific words and phrases can you use that will trigger a smooth claims process? And what innocent-sounding statements will get your file flagged for investigation by their special fraud unit? The conversation with your own insurer is a game with its own set of rules, and you need to know how to play it. Let's start with the moment you make that first call. Your heart is pounding, adrenaline is coursing through your veins, and you're probably standing on the side of a road somewhere. You dial the number on your insurance card, and a calm, professional voice answers. This is your first test. The entire future of your claim can pivot on the next 60 seconds. The only words that should come out of your mouth are a variation of this. Hello, my name is your name. My policy number is your policy number, and I need to report a claim. I was involved in an accident on date at approximately time at location. That's it. Stop talking. The person on the other end is trained to keep you talking. They'll ask, are you okay? What happened? Feels natural, even polite, to unload. To tell them everything. Oh my God. I'm so glad you asked. I just looked down for a second to change the music, and when I looked up, this car was stopped in front of me. I feel so stupid. I think I'm okay, just a little sore. You think you're just being honest. You think you're talking to a helper. What you've actually done is hand the insurance company a loaded gun, pointed directly at your claim. You've just admitted to distracted driving, admitted potential fault, and minimized your own injuries, all in one breath. Every single call is recorded. Every word is logged. It's not a conversation. It's an evidence-gathering session. The most dangerous tool they will use against you is the recorded statement. An adjuster will call you. usually within a day or two. They'll be incredibly friendly, empathetic, and reassuring. They'll say something like, "In order to move forward and get your claim processed quickly, we just need to get a brief recorded statement from you about what happened. It'll only take a few minutes." This sounds reasonable. It sounds like a standard part of the process. It is. It's a standard part of the process designed to protect them, not you. The purpose of the recorded statement is to lock you into a story, right now while you're still flustered, possibly in pain, and before you've had a chance to think clearly or speak to an attorney. They will ask you a series of rapid-fire, specific questions designed to trip you up. How fast were you going? How far was the other car from you when you first saw it? How many seconds passed between when you hit the brakes and the impact? What part of your car hit what part of their car? Where were you looking right before the crash? Unless you have a superpower for accurately judging speed, distance, and time in a high-stress split-second event, you will be guessing. And if your guess later conflicts with the police report, the vehicle data, or a statement you make to a doctor, your credibility is shot. They will use these inconsistencies to argue that you are an unreliable narrator of your own accident. The best way to handle the request for a recorded statement is to politely decline, or at the very least, delay. You can say, "I'm not prepared to give a recorded statement at this time. I'd be happy to provide the information in writing, or I'd like to consult with an attorney before providing a statement." Remember, your own policy likely has a cooperation clause, which means you do have to cooperate with their investigation. But cooperating doesn't mean you have to walk into a verbal ambush unprepared. Now let's talk about those innocent-sounding phrases that are actually giant, flashing red lights to an insurance adjuster. These are the words that get your file flagged and sent to the SIU, the Special Investigations Unit. Think of the SIU as your insurance company's internal private investigators. Their one and only job is to find fraud and find reasons to deny claims. The number one most dangerous phrase, "I'm fine," or "I'm okay." When the adjuster asks how you are, never ever say you are fine even if you feel fine. Adrenaline is a powerful painkiller. Many serious injuries like whiplash, herniated discs, or concussions don't show symptoms for hours or even days. If you say, "I'm fine" on a recorded line, and then a week later you're in excruciating back pain, they will play that recording back. They will argue that your injuries must not have come from the accident, because you yourself said you were fine. The correct answer is always, "I'm shaken up and I'm going to get checked out by a doctor." Or, "It's too soon to tell. I'm experiencing some discomfort, and I'm seeking medical attention." The second phrase, "I'm sorry." In a social setting, "I'm sorry" can mean, "I'm sorry this happened to you." In the context of an insurance claim, it means one thing. "I'm sorry because this was my fault." It is a direct admission of guilt. Never apologize. You can be compassionate, you can ask if the other person is okay, but do not say the words "I'm sorry" or "it was my fault." Next up, any form of speculation. "I think he was speeding. He probably ran the red light. I guess I was going about 45. The moment you say "I think," "probably," or "I guess," you are no longer stating a fact. You are offering an opinion, and if that opinion is proven wrong, it undermines everything else you say. Stick to what you know for sure. What did you see? What did you hear? What did you do? If you don't know the answer is, "I don't recall," or "I'm not certain." These are complete, honest answers. Don't let the adjuster push you into guessing. Another red flag, being too specific or too vague about your injuries. If you say, "My neck hurts," and later it's your back and shoulder that are the bigger problem, they'll focus on the discrepancy. On the other hand, if you just say, "I'm hurt," they'll press for details. The best approach is to be general but comprehensive. "I'm experiencing pain in my neck, back, and shoulders, and I'm waiting for a full diagnosis from my doctor." This covers your bases without locking you into a specific injury before you've been properly evaluated. The conversation with your own insurer is a chess match. Your adjuster, no matter how nice they seem, is not your friend. They are not your advocate. They are a company employee whose performance is judged on their ability to close files, which means paying out as little as possible, as quickly as possible. Your goal is to be a Boy Scout. Be prepared, be truthful, and be precise. Keep a dedicated notebook for your claim. Log every single call, the date, the time, the name of the person you spoke with, and a summary of what was discussed. Follow up important phone calls with a short, polite email confirming what was said. "Dear John, just to confirm our conversation today, You stated that my rental coverage is approved for up to 30 days, and that the appraiser will be out to inspect my vehicle within 48 hours. Please let me know if my understanding is incorrect. This creates a paper trail. It keeps everyone honest and accountable. It transforms you from a flustered victim into an organized, credible claimant who they know they can't easily push around. You are demonstrating that you are taking this seriously, and they, in turn, are more likely to take you seriously. You need to understand that your claim is really two claims: the property damage claim for your car, and the injury claim for your body. The car part is usually more straightforward. They'll assess the damage and either pay for repairs or declare it a total loss and cut you a check. But even here, don't just accept the first offer. Do your own research on Kelley Blue Book or Edmunds to find the true market value of your car. Their first offer is almost always a lowball. The injury claim, however, is where the real fight happens. This is where your PIP coverage comes in, and it's a system filled with trapdoors and deadlines designed to trip you up. You've successfully navigated the first calls. You've avoided the verbal traps and haven't given them any ammunition to use against you. Your car is being dealt with. But now, the medical bills are starting to pile up on your kitchen counter. You thought your $10,000 in PIP coverage would be a simple safety net, but you just received a formal-looking letter from your own insurance company, and it's a denial of benefits. You did everything right, so what went wrong? How can your own insurer refuse to pay for your medical care? In the next part, we will pull back the curtain on the dirty secrets of Florida's PIP system. We'll expose how they use the 14-day rule, independent medical exams, and a concept called an emergency medical condition to legally leave you holding thousands of dollars in medical debt, even when you've paid your premiums for years. The first tripwire they set up is the 14-day rule. It sounds simple, but its consequences are devastating. Florida Statute 627.736 states that for your personal injury protection benefits to pay for any medical treatment, you must receive that initial treatment within 14 days of the car accident. Not 15 days. Not 20, 14. Now you might be thinking, that's easy. If I'm in a crash, I'll go to the doctor. But let's play this out in the real world. You get rear-ended at a stoplight. It's a jolt, but your car looks okay and you feel okay. You're shaken up, a little sore, but the adrenaline is pumping. You exchange information, you go home. The next day your neck is stiff. You think, I'll just take some ibuprofen, maybe use a heating pad. It'll go away. You're busy. You have work, kids, life. You don't want the hassle of a doctor's visit. So you wait. A week goes by. The stiffness isn't going away. In fact, it's getting worse. A dull ache is now a sharp pain shooting down your arm. On day 15, you wake up and you can barely move your neck. You finally decide you have to see a doctor. You go to an urgent care center, they do an exam, maybe an x-ray, and they tell you have a significant soft tissue injury, whiplash. They give you a prescription and refer you to a physical therapist. The bill for that one visit is $500. You hand them your auto insurance card, confident that your PIP coverage will handle it. A few weeks later, you get a letter. Your claim has been denied. All of it. Why? Because you sought treatment on day 15. You missed the window by 24 hours. That $10,000 in PIP coverage you paid for? It's gone. It has vanished into thin air because of a deadline you didn't even know existed. Every single dollar of your medical treatment, the physical therapy, the specialist visits, the potential MRI, is now your personal responsibility. All because you tried to tough it out. The insurance company keeps your premium and pays zero. That is the brutal reality of the 14-day rule. It preys on human nature and the fact that many serious injuries don't show up right away. But let's say you do everything right. You go to the doctor on day 2. You've successfully navigated the first trap. You think you're safe. You think you have access to your full $10,000. Not so fast. Welcome to the second hurdle, the emergency medical condition, or EMC. This is one of the most misunderstood and predatory parts of Florida's no-fault law. Even if you get treatment within 14 days, the law automatically caps your PIP benefits at just $2,500. Not $10,000, $2,500. That's it. That amount can be exhausted in a single emergency room visit. To unlock the full $10,000, a qualified medical professional, a medical doctor, an osteopathic physician, a dentist, a physician's assistant, or an advanced registered nurse practitioner, must explicitly state in your medical records that you have suffered an emergency medical condition. What is that exactly? The legal definition is a medical condition manifesting itself by acute symptoms of sufficient severity, where the absence of immediate medical attention could reasonably be expected to result in serious jeopardy to patient health, or serious impairment to bodily functions, or serious dysfunction of any bodily organ or part. Notice how subjective that is. Sufficient severity. Serious jeopardy. These are not black and white terms. This ambiguity is where the insurance companies live. They will scrutinize your records, looking for any reason to argue that your condition doesn't meet that high standard. Maybe you have a herniated disc in your back causing excruciating pain, but if the doctor's initial note doesn't use that magic emergency medical condition phrase, or language that clearly supports it, the insurance adjuster can, and often will, cap your benefits at $2,500, leaving you on the hook for the remaining $7,500. You did everything right, but because the right words weren't written on a chart, you lose 75% of the coverage you paid for. So let's assume you're one of the lucky ones. You got treatment within 14 days, and your doctor correctly documented an EMC, unlocking your full $10,000 in PIP coverage. You're finally in the clear, right? You can now get the treatment you need to heal. This is where the insurance company plays its trump card. This is their ultimate weapon to deny your claim. It's called the Independent Medical Examination, or IME. The name itself is a masterpiece of deception. Independent. Sounds fair. It sounds objective. It is anything but. An IME is an examination by a doctor who is not treating you, has never met you, and whose sole connection to your case is that they are being paid a hefty fee by your auto insurance company. Let me repeat that. The doctor is chosen and paid by the very same company that stands to save thousands of dollars if your medical benefits are cut off. How independent do you think that doctor is going to be? Here's how it works. At any point while you are receiving treatment, your insurance company can send you a letter demanding that you appear for an IME. It's not a request, it's a demand. Under the terms of your policy, you are contractually obligated to go. If you refuse, they can cut off your benefits immediately. You'll walk into an office, often in a building full of other independent medical examiners. The doctor, who has likely been hired by insurance companies hundreds, if not thousands of times, will have your entire medical file. Their job is not to heal you. Their job is to find a reason to stop the insurance company from having to pay for your healing. They are a hired gun. The examination is often brief, sometimes less than 10 minutes. They might ask you a few questions, have you bent over, test a few reflexes. They aren't looking for what's wrong with you. They're looking for what's not wrong with you. They're looking for any sign of exaggeration. They're looking for any connection to a pre-existing injury. That sore back you had in college 10 years ago? Suddenly, that's the cause of your current agony, not the 4,000-pound SUV that slammed into you. After this brief examination, the doctor writes a report. And a shocking percentage of the time, that report will conclude one of a few things. 1, that you've reached maximum medical improvement, meaning further treatment won't help you even if your own doctor disagrees. 2, that the treatment you are receiving, like physical therapy or chiropractic care, is no longer reasonable or necessary. Or 3, the holy grail for the insurance company, that your injuries are not related to the car accident at all. Once that report lands on the insurance adjuster's desk, your benefits are terminated. It doesn't matter what your own treating physician, the one who has been with you for months, says. The opinion of their independent doctor, who saw you for 7 minutes, overrules everything. This is the gauntlet. This is the system. It is a three-headed monster designed to wear you down and spit you out. You have to get care within 14 days or you get nothing. You have to hope your doctor uses the magic words, emergency medical condition, or you lose 75% of your coverage. And even if you do both of those things perfectly, the company you pay every single month can force you to see their hand-picked doctor whose entire purpose is to give them the justification they need to cut you off. This entire system is designed to make your own PIP coverage, the coverage that is mandatory in Florida, fail you when you need it most. And we haven't even talked about the biggest risk of all. We've only been talking about your own insurance. What about the person who hit you? What about their insurance? Surely, if they were at fault, their company has to pay for your medical bills, your lost wages, your pain and suffering. That's how it's supposed to work. But what if I told you that in Florida, there's a terrifyingly high chance the person who just crashed into you has absolutely zero insurance to cover your injuries? And what if I told you there is one specific coverage you can add to your policy that acts as a financial shield? A bodyguard that protects you from this broken system, and from the massive number of uninsured drivers on the road. It's the single most important insurance decision a Florida driver can make. And most people have no idea what it is or why they desperately need it. It's called uninsured motorist coverage. And in the chaotic, high-risk, and frankly backwards world of Florida auto insurance, it is not just an option. It is your shield. It is your safety net. It is the only thing standing between you and potential financial ruin every single time you get behind the wheel. Let's be crystal clear. Everything we've talked about up to this point has been about protecting other people or protecting your physical car. Your required PIP coverage? A broken Band-Aid for your initial medical bills that runs out almost instantly and covers nothing for your pain and suffering. Your required property damage liability? That's to pay for the other guy's car when you cause the crash. The bodily injury liability we strongly recommended? That's to protect your assets by paying for the other guy's injuries when you cause the crash. Collision and comprehensive? That's to fix your car. But what happens when it's not your fault? What happens when you are the victim? Imagine this scenario. You're doing everything right. You're stopped at a red light on your way home from work. Suddenly, you hear the screech of tires and feel a violent, bone-jarring impact. Your head whips back, then forward. The world goes blurry. A driver texting and not paying attention has just slammed into you at 50 miles per hour. Your car is totaled. You're rushed to the hospital with 3 herniated discs in your neck and a fractured wrist that will require surgery. The police report finds the other driver 100% at fault. Now what? Well, you find out the driver who hit you is one of the more than 5 million Florida drivers who is driving illegally with zero bodily injury liability insurance. They have the bare minimum PIP and property damage, that's it. They have no insurance to pay for your injuries. You try to sue them personally, but you discover they have no money, no assets, no home to put a lien on. They are judgment-proof. You can't get blood from a stone. So, who pays for your suffering? Who pays for the surgery? Who pays for the months of physical therapy? Who pays for the wages you're losing because you can't do your job? Who compensates you for the chronic pain you'll now live with for the rest of your life? Your PIP pays the first $10,000 of medical bills, and that's it. It's gone in the first few days at the hospital. Your health insurance might cover some of the remaining medical bills, but you're still on the hook for deductibles, copays, and out-of-network specialists, which can run into the tens of thousands of dollars. And crucially, your health insurance pays zero for your lost wages. Pays zero for your pain. It pays zero for your suffering, your emotional distress, the loss of your ability to play with your kids, to go for a run, to live your life the way you did before the crash. Without uninsured motorist coverage, the answer to who pays for all of that is, you do. You and your family bear the entire burden. The at-fault driver walks away with a ticket, while your life is turned upside down. This happens every single day in Florida. Now let's rewind that same exact scenario, but this time you have uninsured motorist coverage. We'll call it The crash happens. The other driver has no insurance. But it doesn't matter. Because with coverage, you have effectively hired your own insurance company to stand in the shoes of the uninsured driver and pay for everything they should have paid for. Your own insurance company becomes the insurance company for the person who hit you. They pay for your medical bills that PIP didn't cover. They pay for your future medical needs. They pay for your lost wages. They pay for your future loss of earning capacity if you can't return to your old job. And most importantly, they pay for the human cost, the pain, the suffering, the mental anguish, the permanent changes to your life. coverage makes you whole. It is the only coverage that truly protects you and your family's physical and financial health when you are the victim of a negligent driver. But it gets even more critical. also stands for underinsured motorist coverage. This might be even more common. Let's go back to that crash. Let's say the at-fault driver wasn't completely uninsured. They did the responsible thing and bought bodily injury liability coverage. But they only bought the Florida minimum, which can be as low as $10,000 per person. Your injuries, lost wages, and suffering are valued at $200,000. The at-fault driver's insurance company writes you a check for their policy limit of $10,000. That's all they're legally obligated to pay. So where does the other $190,000 come from? If you don't have coverage, it comes from your savings, your retirement, your kids' college fund, or it doesn't come at all and you're just left to deal with the consequences. But if you have underinsured motorist coverage, your policy steps in and pays that difference. It covers the massive gap between the other driver's pitifully low coverage and the actual value of your damages. So, how much do you need? You should carry limits that are at least equal to your bodily injury liability limits. If you have $100,000 of coverage to protect others from your negligence, you should have at least $100,000 to protect yourself from theirs. But frankly, in today's world of inflated medical costs, I would say $100,000 is the bare minimum. If you can afford it, $250,000, $500,000, or even more is the wisest investment you can make. It's an investment in your own future. Now, here's the most important decision you will make regarding coverage: stacked versus non-stacked. This sounds complicated, but it's incredibly simple and incredibly powerful. Non-stacked coverage is straightforward. If you buy a policy with $100,000 of coverage, you have $100,000 of coverage. That's it. Stacked coverage is where the magic happens. If you have more than one car on your policy, stacking allows you to multiply your coverage by the number of cars you own. Let's say you have 2 cars, and you have a $100,000 stacked policy. If you get into that terrible accident, you don't just have $100,000 of coverage. You have $200,000. 3 cars, you have $300,000. The small extra premium you pay to stack your insurance is, without question, the single best bargain in the entire insurance industry. For a few extra dollars a month, you can double or triple the safety net that protects your family. If you have more than one car, you should always choose stacked coverage. So why doesn't everyone have this? Because of a dangerous loophole in Florida law. Insurance companies are required to offer you coverage. However, they are also allowed to have you sign a form to specifically reject it. And many agents, in a race to give you the lowest possible quote, will present this as a great way to save money. They'll say, just sign here to reject the optional coverage, and we can bring your premium down by $30 a month. Let me be as clear as I can possibly be. Signing that waiver is the single most financially dangerous decision a Florida driver can make. It is the equivalent of removing the airbags from your car to save a few bucks on the sticker price. You are gambling your entire financial future, your home, your ability to provide for your family, to save a few $100s a year. Never, ever, under any circumstances, sign that form. You demand uninsured motorist coverage. So this is our final message. After all the complexities and all the confusing terms, it all boils down to this. The auto insurance system in Florida is fundamentally designed to protect everyone but you, the responsible driver. The state minimums are a joke. The no-fault system is a broken mess. The roads are filled with people who carry little to no insurance. In this environment, you have to be your own protector. You have to build your own fortress. Bodily injury liability is the wall of that fortress, protecting your assets from the outside world. But uninsured motorist coverage is the safe room inside. It's what protects you and your family when the walls are breached by someone else's recklessness. Your homework after watching all of this is not to like or subscribe. Your homework is to go find your auto insurance policy right now. Look at the declarations page. Find the line item that says uninsured motorist or UM/UIM. Look at the numbers next to it. If those numbers are lower than your bodily injury limits, you need to make a call. If it says rejected or the number is 0, you need to pick up the phone tomorrow morning and make the most important call you will make all year. You tell your agent, I want to add stacked uninsured motorist coverage, and I want the limits to be as high as I can possibly afford. Do not wait until you're on the side of the road, watching smoke pour from your engine and feeling the pain shoot down your spine, to discover that the person who hit you has nothing, and because of a form you signed years ago, you have nothing to protect you either. Take control. Protect yourself. Because in Florida, nobody else is going to do it for you.